Hey, Scott. Hello, Andy.
Hey Scott, hey Steve, how are you?
Yep. I hear you. You see my screen, trade of the week?
I do.
Cool.
Very vivid.
All right. Very good. Very good. All
Hmm.
right. Thanks, everybody, for our weekly evening webinar trade of the week. You know, there's a lot going on, especially in the evenings for those of you on the East Coast as well. Appreciate you tuning in. But like Scott said, these will be recorded. So we're going to do some cool stuff tonight with some formulas. And so those of you who are watching on recording, get ready to use your pause button because you might want to use your pause button a few times going forward because I'm going to show you some cool stuff. But it's going to require you to do a little bit of homework yourself. Before we get into all that cool stuff that we're going to talk about, just the regular old disclaimer. You guys realize what we're doing here is content publishing. We're kicking out some ideas for the markets using awesome technology of trade ideas. Please don't misconstrue this for investment advice. We're not registered investment brokers. We're not registered investment advisors. We're not brokers carrying licenses. We're just a basket of deplorables that like to trade stocks and like to use good technology to do it. I'm going to spend a little bit of time, as I usually do on this slide, for those that are not regulars. You're not alone when you take trade ideas. One of the biggest feedbacks of trade ideas is, boy, that's really an extensive program. There is a lot to learn. It's almost overwhelming. And we recognize that. It's a very powerful program, which is another way to put it. So we have a lot of ways to give support throughout the week. We do 4 webinars, including the one you're listening to now. The live trading room, which is the screen you see there, that's Barry's live room. There's about 500 people in there every day. It's a live room and it's a free room, and he does a great job of demonstrating the Trade Ideas technology, how to find great setups, talks a lot about AI Holly and how to use the AI Holly, answers questions, technical support, and trades his own account. So Barry does a great job of multitasking in that room. Not a lot of people could do it as well as he does. And then, aside from the live trading room and the 4 webinars, you know, we have this thing we call one-on-one session, the hour of power. Anybody who signs up for a 1-month trial, and I'm talking to those of you right now who are kind of maybe disappointed that you missed the open house week, or you realize we don't have a free week trial or any sort like that. What we recommend doing is coming in and using the promo codes that Scott's going to give at the end of the webinar and set up a 1-month account. And why am I saying that? Because when you do that, you're eligible to sign up for the free one-on-one training with myself, Andy, Brad, or Jamie, anyone who's available. You request, you can schedule that. And we share desktops and we spend time with you directly for a full hour, find out what your goals are, what you want to do, what your questions are. Kind of point you in the right direction because trading is a art form. It's not a science. And so everybody approaches it differently. So just to rehash, if you're thinking about trying trade ideas and you don't see a free trial at the moment, basically just give it a 1-month whirl, sign up for the promo code that Scott gives you to save some good money, and then right away sign up for one-on-one. And after 30 days of trying the program and having that one-on-one hour experience, you know, if you feel the program's not for you, then you can make that decision for you at that time. But that's really the way most people do it. To get the best feel for the learning curve of everything that Trade Ideas does have to offer. Okay, a quick synopsis on our back end. We don't make this public, but we show it a lot during our webinars. The Holly for, that should not be October 19th. That should be through today. So the 26th was an updated slide, just a bad date. Nice little move. I'll talk about this move yesterday. Holly just killed it on the short side. But once again, we can see, going back to the Brexit, the volatility of the Brexit, Holly had none of it. But at the same time, we were instilling new risk management parameters and some new nice base strategies with which she has done a great job configuring and moving forward. So it's been a really nice 6 months here, separating ourselves with the aggregate point, Holly performance in points versus the S&P in points. And, you know, this is a very similar looking chart, except this is our subscription growth, and we share this with you guys to show you that basically right about here was when the AI Holly technology was introduced. And so probably not a big coincidence that you're seeing this big spike in subscribers, and we're calling that due to Holly's performance as well as our continued education and onboarding concierge service goes. So AI is the hottest thing in town right now for fintech. feedback. If you're not a subscriber, we'd love to have you at least try a month and see what you think. Agenda tonight, pretty typical market recap. Not a whole lot of new stuff to talk about. Holly recap was another kind of a quiet day, but I've got some more directional bias examples to show you to try and really simplify things. And then for those of you who haven't noticed, wait for the 8 is a strategy that has been just kicking butt lately in the AI Holly. And we've had this strategy for a few weeks now, even before Holly took it and did her magic with it. But this thing right here, this ABS, absolute value price, a simple moving average, 15-minute period, 15-minute candle, 8-minute SMA divided by price. I'm not a mathematician, but what I know is that you're going to want to copy this down because we're going to talk a lot about this wait for the 8 alert today. I'm going to show you how well it's been kicking ass, why it's been kicking ass, and if you want to participate in it, it's not so easy to just go ahead and share or collaborate or share our cloud setting on that. You need to have a custom formula. So we're going to go over this. This is something that's not in the database for everybody to use, but I'm going to show you how simple it is to log into your account and add a custom formula to your account, and then the wait for the 8 strategy scanner will actually work the way it's supposed to, and I'm going to show you some pretty cool examples today. All right, and then we're going to talk about Yelp, Trade of the Week Yelp. I'll keep some of the stuff under wraps until we get there. And then continuing in the same vein of the way we picked Yelp for this Trade of the Week, we're going to talk about how we use trade ideas, price alerts for some contrarian entries. We'll show you some examples of past contrarian entries and maybe try and turn your mind upside down to kind of think about how you can continue to use price alerts without having to do a breakout scenario every single time, because as I get to the market recap here, you're going to see we're in quite the choppy range-bound market, and we'll set some more price alerts. By the way, did anybody see Holly yesterday? I'm going to talk about it here in a moment, but on the short side, at the end of the day, when all was said and done, the risk on Holly generated about $8 in profits. Really an amazing day. If we look at the quick slide here, this is from Andy, so you can see 1 p.m. was the actual stop time. It's 2 p.m. Eastern, 11 a.m. Pacific time. That's when the wait for the 8 all stopped. They all stopped at the same time. But if you'll notice, we had 13, 21, 27 trades were short out of about 30 some odd trades. So yesterday was the day to be short. And I'm going to show you a little bit of a early tip-off that Holly gave us yesterday morning that we call the directional bias. So with that said, that's what we got on plan. Let's just quickly take a look at our mess of a market that we will start with here called the SPY on an ETF for the S&P 500 on Monday. Jamie and I were talking about the same thing, and Jamie actually had text in here. He called it the clump
range.
Clump range. Yeah. You're in full clump range. I fully believe this market doesn't want to make a stand. And what do I mean by stand? I mean a stand by breaking down below and closing and following through below this orange line to the downside, nor does it really want to break out or close above this high line. So we're in the clump range, the Clinton-Trump lovely 2016 election like no other that we have, and I think that maybe has something to do with price action. I mean, I don't care who you are, but you can make a case for two different scenarios. I think everybody knows Wall Street. Clinton is probably the one that Wall Street wants. Goldman Sachs endorsed her, and a Clinton election probably wouldn't be too much of a spook for the market. However, if for any reason we see President Trump come in, that could be a bit of a spook for the market. So I'm not generally in the business of predicting, but that's kind of what could be going on here. There's no conviction as to how this election is going to go, and the market hates uncertainty. And as long as there's still one candidate with a chance to disrupt things, we could have some more volatility to come. So, what does that mean for us? We're still, I think, 9 trading days away until we get this election out of the way. But this is the range we're in. You can see we had an attempt to break down, and no thank you, back above, close above. We did have a slight attempt to close below, but a giant gap back up. gap up 2 days ago. So it's just a lot of gapping back and forth, staying in no man's land here. So a lot of noise. A lot of noise in the market until we possibly figure out this crazy election. And real quickly, when I was with Jamie on Monday, we looked at the Qs, and they had this green candle here, and I said, well, this is a little interesting. This kind of gives us maybe a little bit of hope and bias for the bulls to look for some sort of leadership. But since then, we've pulled back a little bit in the Qs. But nonetheless, the Qs still seem to be the ETF that has the most momentum behind it. If this market wants to move higher, it's going to be the Qs, in my opinion, that are going to take us and lead us higher. Do you have any thoughts on this segment, Mr. Andy?
Yeah, not too many because we are definitely in a range. But I mentioned to Steve a few days ago that, boy, it just really feels like there's possibly some distribution going on over here the last 3 months. So you haven't seen, like I mentioned in my past webinar, you haven't seen too many cases over the last few years where we've just gone sideways for so long. Usually, when the bears are trapped, you get a quick up move and they're panicking to get out, and you haven't seen a lot of sideways action like this. One could argue it's possible distribution. I know a lot of I'm reading some stuff about institutions, are dumping more stocks than ever. They can be wrong, just like hedge funds can be wrong. So it's not our job is to guess in this situation as traders. We only react. But go ahead.
I can tell you this. Andy mentioned the word distribution, and he read an article that put a dollar amount on the amount of distribution. But there's ways in which you can identify a distribution on the charts. And what I'm just doing right here, I know our volumes are a little bit light. They're going to be darkened up in future releases. But what happens is when you get to toppy levels in a market that don't really go anywhere, you start to look at the candles on the down days versus the candles on the up days. Here's a big down day. Big volume in candle. The next volume on the up day, less volume. Following day, big red candle. Volume increases. Next couple days, not much to be gleaned from that, but here's a red candle on a red day. Here's another red candle on a red day. So, there's 3 in a row right there. The spikes in the volume that I'm looking at down here, these big spikes, they're all correlating with red candles. And that really is the footprints that you can label as distribution, which is usually in hindsight, of course, but you can see distribution in the tea leaves and the footprints in the sand when you just basically associate a high volume spike with direction of the candle that day. So there's been some big wide ranges in this last 2 weeks here, but if you guys want to on your own take a look at the candles that are sticking out with high volume spikes on the day, those are red candles. And that can, and many times does, indicate possible distribution. But, we never really know until after the autopsy if that's actually the case or not. So there's our market recap, keeping an eye on price action. Many fake outs, green day followed by a red day, gap up followed by a gap down, followed by a doji. Not really going anywhere, and it may continue to have this type of action until we get directly into a final election result. Okay, that was market recap. Holly recap and directional bias. Well, let's take a look at Holly. For those of you who were here last week on the open house, she went crazy and had a lot of trades. But the first 3 days of this week is very different. We're back to the normal. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, about 13 trades or so, more or less. But before I get into today, which we will do, let's look a little bit at some directional bias. I'm going to go back to yesterday when I showed you that slide that says, were you guys shorting yesterday? Because that seemed to be the order of the day. So here's what I'm going to do. I'm going to back out just a little bit on this SPY chart. I'm going to open it up as best I can. Okay. This first candle was the opening candle of yesterday. 15-minute candle. Here's the second candle of yesterday, so coming into 10 o'clock East Coast time. And then we get into the 10 o'clock candle to 10 to 10:15 right here, this third candle that I'm looking at in my SPY. So I'm going to try and get that as big as possible. So here's yesterday. Well, when we look at Holly, and I try and remind people, one of the ways I really enjoy using this tool is not always so much the individual trades coming out on the stock symbols, but what is the directional bias, and especially at the time of day. So at 7:14, which is 10:14 East Coast, 10:17, 10:24, 10:32, 10:27. So within about 15, 20 minutes here, we had a flurry of what? We had a flurry of a single direction shorts. We got some wait for the eights, which we're going to talk a lot about, some downward momentum. So basically, Holly did what I'm talking about. We went from 0 trades to 5 shorts in a period of 10, 15 minutes. And that's a crucial time of the day, too, by the way, the 10 o'clock hour. So if I just go back and scroll forward here, let's just, oh, look at this. One little click of the mouse shows us exactly what happened 30, 45 minutes after all of these trades came out. This is our spiders, a little bit of a relief bounce and some more weakness. So Holly gave us a wonderful signal as to directional bias yesterday. Okay, that was yesterday. Today, not so much. And every day, of course, is different. This could have just as easily been a bunch of long trades, and then we could have tried to dissect what the long trades were. Let's close that and go to today. Let me zoom forward here just a little bit. All right, there's the down candle. There's our opening gap down candle today. Holly did not make any trades until 10 o'clock East, 7 o'clock Pacific. So 7:03, and then 7:23, 7:25. So in the first 20, 25 minutes, we got a mixed bag. We got short, long, short, long. So do not confuse that with directional bias. This is Holly just taking some stabs here and there. I'm more interested when it's all in one direction, because let's take a look at our candle. Here's our first candle in the S&P today. Here's our second candle red. Here's our third candle green. Here's our fourth candle doji. And then we have something which is a bit of an anomaly. So for the first hour of the day, there was no direction, and Holly really did not have a directional bias. So I wanted to point that out to you today. Some of you might ask, well, why did not Holly see this coming and start throwing out a bunch of long trades? Well, this is a unique event. This is the Wednesday 10:30 oil inventories. So Holly's not a predictor, but a reactor. And so, once these green candles came out, which were directly correlated, if I put up USO, you will see the same thing right here. The oil ETF took off after the inventories came out. So, at about 7:30 our time, the trades continued to go long, and there wasn't really much directional bias beyond that. So not a whole lot of a hint of directional bias today, but compared to yesterday, that gave us a really nice early clue. Really nice early clue. All right, so today was another decent day. 58 cents on not too many trades. For the most part, look at this. Wait for the 8. Again, if you guys have been paying attention, and if you sort, let's go ahead and sort by win percentage. These are the win percentage scores coming out of our out-of-sample data last night from the AI. Once again, wait for the 8 is at the top. I think wait for the 8 has been at the top for a few days now. Let's take a look at that one that we had yesterday. Where is that one? I closed it already. That's too bad nonetheless. But this wait for the 8 strategy has been scoring high 70s and early low 80s. It's been at the top strategy if you sort almost every day, I think, for the last week and a half. So it bears some digging into, and we're going to spend some time and dig into that strategy tonight. We're going to get you guys fitted with that and share it with you. But no surprise there. It created a decent trade. Let me go back to sorting here again. A little big guy had one trade. It was a winner. 2 trades, 100%. 1 trade, 100%. 4 trades at 50. So, a decent showing once again. And it was definitely a risk-off day. If we look at the spiders today, we had a big bounce up, and then we pretty much gave it all the way back. So a lot of noise, difficult to hold on to things in a day like today. So risk-off was certainly the order of the day. Let's take a look at the one trade, which is Comcast. Comcast was our wait for the 8 trade of the day, and it actually reduced risk was the exit reason. Holly took 3 cents, but by the end of the day, risk on, it was up 36 cents. So let's take a quick look at how we break this one down. The orange line that I drew in here is basically the flat line, and the arrow is the candle at which the particular trade was initiated. The blue tag right here is our price, 62.85. So we had a trade wallowed a little bit in the unchanged territory, bounced up maybe 10, 15 cents, not that much pain, then kind of came back to flat, and then the algorithm of Holly said, you know what, this just really isn't following through the way I wanted it to. I'm going to go ahead and just call it reduced risk and get out from pretty much a flat. But as you can see, as the day wore on, this particular trade certainly did work. And it was the one and only trade that came through on the wait for the 8 today. So let's do something here real quick. Let's talk about wait for the 8 because I think a lot of people want it. I asked Barry what's the little big guy strategy look for, but he wasn't sure. Not sure, David, but by the name of it, little big guy is probably a stock that's lower priced, under $10, and looking for a big type of move. Sometimes we have to kind of get a bit decoding, detective-like for our explanations, which brings me to wait for the 8. Let me tell you a little story. Wait for the 8 was actually submitted as a base strategy by Michael Noss, and he's the one that did our custom formulas webinar the other night. He's a long-time user, and he used to follow Andy and myself on YouTube when we were doing our live desktop sharing trading videos back in 2008, 2009, 2010. And he remembered one of the lessons of trading we were giving out that day. We were using the 10-period moving average, and we were saying, you know, stocks that are in motion on a 15-minute chart like this, when they make a big, quick move in one direction, sometimes they're just going to consolidate a little bit, and they're going to wait for the fast-moving average to catch up. In our case, we were using the 10-period SMA, so we'd say, well, let's wait for the fast line to catch up. Michael actually took that a step further, and he used it with the 8-period SMA moving average, and that's essentially what wait for the 8 means. It means a big price move on the open, and then consolidation. And then we're waiting essentially for the 8-period moving average to catch up to it on a 15-minute chart interval, that is. Now, we do not have a 8-period moving average on a 15-minute candle filter preset in Trade Ideas. So that is why we have to build our own custom filter. And for those of you, again, I'm going to rehash this. If you can, I have copied and pasted this formula and dropped it into the chat window. What you guys might want to do, if you're watching this on video, copy it down. If you're with me live, maybe go into the chat window, copy and paste, and put this into a Word document because you're going to need this. We're going to set up the custom alert to make sure that the actual filter that we need here is working, because if you don't have this filter, the wait for the 8 tool scanner is useless. So today, this is my wait for the 8, okay? This is not the one Holly uses. However, take a look in here, Comcast, look at that. It did come through, rolling through today. So Comcast was in my mix of wait for the 8, and this is the one I'm going to share with you. But I took a little time to go through some of these short trades that triggered today, and I've drawn an orange line right across the horizontal entry. You guys tell me if you think this might be something you might want. Okay, big price down, consolidation, consolidation. We don't have moving averages yet. You can't see it, but what's happening right here is the 8-period moving average has caught up to the price and forced the issue and forced the hand lower. Nice setup. Another nice setup. Another nice follow through to the downside. Are they all going to work? No. But that's the nature of trading. We've got to manage our own risk. This one was a decent entry, but didn't really follow through. Comcast we talked about. Got caught up in the congestion, but eventually did move lower. Same with this one, created some alpha a little bit below that orange line. How'd you like to have this trade? Bouncing off that, sideways action, the invisible 8-period moving average catches up with it, throws the price action lower. So for those of you who are not afraid to short, this is a great setup. Yes, Andy?
Would you mind if I interject here? And guys, see, we always talk about looking left, and when you're trading, pull up Comcast first. Okay, look at the daily and look left. Okay, and what's the other one you pulled up? Go ahead and pull up the next one. AMP. Look at there and look left. Okay, he showed you on the 15-minute. Okay, it's breaking down. Look left. There's no real support there till you get down to probably 35.
Same thing here. Same thing here.
Same thing here. Now pull up the one that didn't work there, Steve. I believe it was
Yandex. Let's take a look at the
Look at
intraday.
yeah, look at left.
Yeah.
Look at left.
Yeah.
Yeah, that didn't work. But look at that. Look at the congestion on the left side. It kind of reached its destination there, and it held, and it didn't work. So, guys, we can't emphasize this enough. This look left.
Yeah.
We don't say it just to hear ourselves talk. There's
Yeah.
a lot of
Well, we've actually added to it. Zoom out, look left.
Yeah.
Right.
There you go. There you
Zoom
go.
out.
Yeah. Zoom out. Yeah.
Look
and
left.
Look left.
Okay.
Look at
All right.
Look at that. Yeah.
Okay, so I think I've tantalized and teased you guys enough with some alpha that was basically generated on the short side. So if you're not afraid to go short, this is the hot hand short strategy that's been working, and it's why Holly has been showing it up on the high score for the most part for the last week. So we're going to walk through this together, guys. Before I drop in the collaboration, I want everybody to follow me closely here because this is what's going to need to be done. You're going to need to go to trade-ideas.com. You're going to need to go to support. Okay, here's where we are in support. You're going to need to go to traders area, and we have what's called the formula editor. Now, if you'll notice, I'm not currently logged in. So once I log in, and you guys, you got to log in, otherwise you're not going to get it. Now you'll see everything that you have in your account that has to do with custom formulas. This is my account. These are my custom formulas. Let's locate wait for the 8. It's this one right here. Here is the 8. Here's the exact same code that I've copied and pasted into the chat room and asked you guys to make a working copy of this because this is what you're going to need to do. So the first thing you do is log in. Second thing you're going to need to do is you're going to need to create U4 because U4 is assigned to this particular code, which is what, when I give you the final cloud link, it's going to look for U4. So if you have all this stuff stuffed in U8, well, I mean, you could manually override it and substitute U8 for U4 if you get my drift, but the easiest way is to assign this one to uniform number 4. So if we go to U4, that'll be your first step. Let me just go to edit because I've already done mine. This is what your page will look like. All you need to do is paste in the absolute value formula here that I've given in the chat window. Paste that in the description. You could call it 8 SMA, even on a 15-minute candle if you want to really get descriptive. The units are percents, and that's all you need to do. Hit save, and double check down here. If we had an error, watch what happens. If I do something wrong here and take off that E and hit save, oh, we've got an error. We don't want error. We want to have it look like, okay, good. Original source, we're all set. Back to the original list. Double check that your U4 is now enabled. Okay, so what you've done is you have enabled U4 into your account rather than sending in the request for us to go into your account and do it for you manually. It's a really good exercise to kind of learn how to do these things. So now that you've got U4, how do you find it? Well, you can just go to any old alert window you want, new, it doesn't matter, and when you go to search, go all the way to the bottom, and you'll see all of your custom formulas. There's my U4, 8 SMA 15 candle. Okay, so that's step number 1 that you guys are going to need to make this thing work. Second step is just to make sure, if we look at the configuration here, let's take a look at my U4. What we're doing down here, here it is, U4, and this will come through. Now, just again, step number 1, you guys got to configure your U4. Then step number 2 will be to accept my cloud link and load from cloud. But make sure you've got this U4 in there first. What are we looking at here? We're looking at a minimum of negative, well, let's just check here. If we check our work by pressing that, we can't see it because it's not one of our normal values. Let me explain. Negative 0.5 is our minimum. Maximum is positive 0.05. So what we're saying is the filter for this 8-period moving average on a 15-minute chart, it's got to be within 0.05% of the current price, and that's the filter value that we're using. Now this will translate over when we give you guys the cloud link, so you don't need to reprogram that. I'm just kind of showing you. And then everything else that's in here will also come through. Now, a lot of this stuff is optimized. It was optimized by myself manually, but the cool thing about it is this is an A window, so you can go in, those that have the ability, you can go in and back test and start to play around. I'm not going to do it now, it'll take too much time, but start to play around with hold times, stop loss amounts, maybe even optimization if you want, but I'm just going to give you my working copy. So back to those that are on video watching this thing on replay, make sure that you've gone to your formula editor first, selected U4, create new, and post that into your U4 so you have the same configuration that I have, and then we're good to go. All right, so now with that said, I want you guys also, I'm going to drop in the cloud, but do the same thing here, save and share. Copy this onto a clipboard or a notepad or a Word document, and don't load it until you've done the proper U4 custom formula, because it won't work the correct way. So let me drop in the cloud link, wait for the 8. Cloud link. 8. Okay, so for those that need a refresher, it's in the toolbar of GoToMeeting. Chat window has a plus key. Hit the plus key. That will expand the window. First thing you're seeing there is the actual custom formula, and you need to copy paste that and go through the steps I showed you. And then the second step is to receive and copy the link address and then open up everything through the cloud. Then you will have a working copy of Wait for the 8. And again, if you're not afraid to go short, this thing has been spitting out some real gems. So that begs the question, well, why not go Wait for the 8 long? Well, we did. I went ahead and did the basic flip function, but I wasn't really happy with what came out, so I spent some time and some additional optimization on Wait for the 8 long. Let's see what we got today. Today we got Wait for the 8 long right here, a little bit of alpha at the end of the day. But this SPR, this one was a gem. Let's zoom out and look left. Hey, breaking out, what do you know? Not only that, it's the perfect upside down from what we've been talking about. Big price action move in the morning, consolidation, waiting for the 8-period moving average to catch up to it, and that's the hand that usually forces the issue higher if it wants to go. It's not guaranteed, but as you can see, Holly testing this thing, it's testing in the 70%. So this is a great strategy for you guys, and I'm really happy to share it. I just want to make sure that you guys have the correct U formula. So the U formula will also work with the Wait for the 8 up, and there's no changes that need to be made. So let's take a look here. Where are you? 8-period. This one is actually U15. Why is this one U15? That's a good question. I'm going to change that because it really shouldn't be. We need to keep everything on the same level here. So let's go to the bottom, and we'll do this on the fly here. Here's my U4, add candle. Okay, U4, we're going to do negative 0.05, positive 0.05, and we'll clean these out. And we're just trying to keep the confusion down because we're all going to use the same U4 value there. Okay. All right. So that being said, same thing we can do. I'll go ahead and copy the cloud link, wait for the 8 up. It should work for you as long as you've got the U4 filter configured, which I've talked ad nauseum about. Wait for the 8 up and paste into chat window. All right. So I really wanted to spend some time on that because those of you who are watching, you keep seeing this thing at the high end of the testing every day. What I gave you is not the exact version Holly has because, as you'll see, look at all the ones that I had today, but the only one that Holly took was Comcast. So for whatever reason, it might have been a market filter with the S&Ps we're doing or whatnot. Holly is much more conservative with her calls, but again, some great short side calls here today on this particular strategy, and we always want to share with you guys. Yes.
Let me ask you something. So if you have the U4 formula and you've already created the weight for the 8 to the downside, wouldn't you be able just to go in and flip it and create
Well,
a
I tried
similar?
that. I tried that, but I think what I did is I came back and I optimized this one on my own. I don't think
Okay.
I started with it, but it wasn't spitting out some of the things that I wanted.
Okay.
So I went ahead and just optimized it. But
But in theory, that does work. I mean,
that's a great starting point. Yes.
okay.
Yes.
Okay.
And for what Andy's talking about, for those of you who don't know, you could basically you could take this. Your first step is to take any strategy window, duplicate it, then go ahead and hit configure with a flip, and hit OK. And look at this. We have a different. See, we have a different stock.
Yeah. Let's see.
I'm just going to close that out and keep this one. I did share this one, so the one that I shared, I've already done a little bit of optimization to it. But hey, I would expect everybody to do their own fine-tuning and their own back testing and uncover every stone they possibly can. All right, so that brings us to the title of the webinar, Trade of the Week. Now, for this particular Trade of the Week, we decided we were going to hunt again for something that worked very well in the past. That was the Facebook Trade of the Week. And this orange line right here dictates the day on which Facebook was called the Trade of the Week. And it was called a conditional trade. You had to wait until it pulled back. And when it pulled back, it had to touch and fill the gap right back here. So again, another lesson in zooming out, looking left, trying to find areas of full pain that people might get stopped out, but also make technical sense. Levels of pivots, pivot levels, support levels, S1, S2, but more importantly, even gaps can be a great example. So let's pull up Yelp. Yelp has been a really nice mover, but it's had just a mission impossible pullback. And so we looked at it and we said, well, looks like a very similar trade to Facebook and the way the market has been lately. We talked about the back and forth. Breakouts don't really seem to work. Contrarian plays seem to work better. So the actual trade was set, I believe, at 32.75. Let me just look at my price alert because I'm still using my price alert for the trade of the week. Yelp, 32.76. So this is still a red line, which is an active trade. Now, I chuckled a little bit on Monday. I went into Barry's live trading room, which was this green bar here, and saw a lot of people talking about the trade of the week, going to highs, and that's great. I hope they made some money on it, but they didn't read the email exclusively. The email said to wait for the price, the pullback price of 32.76, 32.75 in that area. There's a reason for that, just like I showed you on the Facebook trade. This is the complete filling of a gap. So what happens if you chase this green bar without the filling of the gap, premature euphoria? Well, that may be what happened here because Andy and I over the years have talked about something that we affectionately call the double dip or the double dipsy doodle trade, where it gets close to the level where you think it's going to go, takes it for a day, day and a half or two, but then backs up and then takes the double dip down to the level that really should have gone. So what I'm trying to tell you guys here is technically Yelp is not an active trade. It got close but didn't trigger it. But what I would kind of like to see is maybe an example tomorrow of the double dip trade where we actually do go down and physically close that gap. That's when the price alert should go off. You guys that have price alert functions should all have that set for that particular level. And when it goes off, watch the price action. Now, if the Dow's down 500 and everything's crashing, then obviously forget it. But if this was just a foregone conclusion pile drive down of a algorithm feedback loop to get this thing to close the gap, and everything else is looking decent, and a bidder actually might join in here on a 15-minute chart, well, then the trade of the week, should be considered, in my opinion. So that's the thought behind the trade of the week, and the thought when the market gets like this, going back to the spiders, and doesn't break out, doesn't follow through, gap up, gap down, back and forth doji, no real direction, you got to start getting creative in your entries. And one of the ways we can get creative is the pullback entry. And I've got some examples for you, but before I do that, did you want to add anything? Because I know
I do. If you pull back up Yelp, if you'll pull back up Yelp for me again. Yeah, guys, going back to what he was just talking about, and the double dipsy doodle. I love that name, but I can't tell you how many times this has worked in the past. And it's a strange phenomena, but it's like the market is not going to let you just have just a clean entry like that and let you, oh man, got it, pick the bottom. No, it doesn't work that way, and you have people that get in. Well, now those longs that got in are sweating, and oh man, if we break down, what if it doesn't bounce at the gap? But just keep this little pattern in mind because I've seen it so many times in my years of trading that it's just if you're patient enough, you'll get the double dipsy doodle, and it will come down and it'll get nearer to where you're expecting it to go, and then it will bounce, and people are thinking they caught the bottom, and it starts reversing. They get nervous, and then they cough up their shares, and you get your price later at the gap fill. So. I remember when Facebook, was doing it that day, and I can't remember. I was talking to a group or something, but anyway, maybe I was doing Barry's.
Yeah, you were, I think.
Yeah,
It didn't give much pain. It was a one-trick pony that time. It didn't do the double gap. I think the market had a lot.
No, but I do remember trading about a buck higher, and the market was bouncing, and I'm thinking, these things when they get this close, they're going to reach their destiny. You got to be patient and wait for it.
It's their destiny, Luke.
Yeah, it is. It's their destiny. Yeah, it's Darth Vader saying it's their destiny. They're gonna reach that point. So just learn to be patient, and hopefully, this Yelp will work out. And I wouldn't be surprised to see it go a little bit lower naturally, but still, I think it's a very good risk reward entry. If you get it.
Yep. So when you got a choppy market and breakouts are not working and they're wicking and pulling back and faking everybody out, sometimes all you can do is control your entry and your entry size, your positioning size. So to stay in that theme, and I'd like everybody, if you have it, to set the alert for Yelp there on your price alerts if you have price alerts. And to continue with that theme, we're going to set a few more alerts tonight like we always try to do and pop them in the price alerts and share them. But we're going to look for some additional examples of some contrarian entries. The first one I have is Etsy. And you can see Etsy has definitely, I'll draw that markup, has definitely broken through and followed through. So like Andy just said, it's so darn close to the filling of this possible gap that it just may want to do that. So there's a little bit of meat left on this bone here in Etsy. Let me go ahead and turn that off because I am going to set that as a price alert. Crosshairs off, hit the delete key. So let's take a look here. We'll use our crosshairs again to get our numbers. And a possible pullback gap fill in Etsy would be 12.96. So we'll go ahead and right-click price alert, 12.96.
And some argue, some argue that some argue that the official gap fill would be the close, but I can, so
you can do both. How about
you can do both.
There's no law that says we can't do both. So
that's right.
The actual close was 12.50. It was the open actually. I'm sorry, what was this? 12.
Looks like you're there right there. Yeah.
13. No, the close was 13.84. What?
12.8. No.
Oh, I'm on the wrong candle. That's why. 12.71.
Okay.
1271, create price alert at 1271 also. So this is a double alert here for Etsy. You could have two levels. You may have to watch both those levels. What's another interesting one? TWLO. What was I seeing here? This one wasn't so much a gap, and I've zoomed all the way out as I can on this one. This is a new issue. So here's day number 1 of trading. There's a gap way down here, but that's pretty far down. That could be in play later as a new issue, but the first place I would look at on this particular one is this pretty good level of support right here. I can mark that up. Well, I'm not going to mark it up because I'm going to use a price alert, but if I use my crosshairs, you can see it was the high on this day, high on this day, the close on this day, bottom wick on this day, bottom wick. So here is a pretty evident pivot point right here. Price alert looks like it's so close it probably just wants to go kiss it, see if it can trade below, lift the rug, and if it can trigger any price alerts for a washout, then so be it. But I'd like to know about it, and I'd like to know and be able to watch it if and when that happens. So we'll take the low of this candle back here, and we'll go 37.19. 37.19, and this is not short because the market, or excuse me, the trade ideas thinks we want to go short because our price alert is below, but we've got to remember we're going long on a pullback. We're looking for a pullback alert. PB alert. Watch price action closely as it trades if it gets there. Okay. Next one is this is a good one. You could use Zillow or you could use Zillow Group. I'm going to zoom in because that's not correct. The way the Zillow Group chart looks is something like this. We got very close on this day right here, but not quite a gap fill. So just for fun, if the price of Zillow wants to come back down, I think on this one I'll go ahead and give it a little bit of extra. I'll use the close on this one, which is 30.79. So we'll create price alert 30.79, pullback, gap fill. Some of these may trigger, some of these may not, but we're trying to set some examples of ways to think about turning your hat around opposite and doing some contrarian thinking. And the last one I believe that I had for you guys was Yahoo. No, I've got two more. I've got Yahoo. So we can see probably an earnings breakaway gap just like Yelp was, but like I said in the comments, you know, some gaps were made to be filled is it wants to make a lower week or so. This one could take, I don't know about it if it's filled. So the close is 39. No, I'll go for the high. I'm sorry, 39.98. Let's just go 40 even. We'll go 40 even. Gap fill in Yahoo. And then the last one I have was another well-known name, Hewlett-Packard. It's really trying to break these levels down here. It held that level, held this level the other day, but it's still throwing some fits, not wanting to bounce. Big old wick to the upside, looking like it may want to try and push through lower. But in that particular case, the gap fill could be the top of this wick right here. We'll just go with that. What is that price alert? 13.31. And remember, we're not doing short, we're doing long. Pullback, gap fill, 13.31. So just a different way of looking at some entries, guys, and a different way of considering using your price alerts. They don't always have to be from below. Breakouts don't start working, like this one right here. This breakout was a complete failure. If you start to see some more of those, we'll then start zooming out, looking left, and looking for levels that make sense where bidders might start jumping in. And especially gaps when they get filled like that, it's really nice to have these price alerts pop up because this thing could trigger in a week and you may have forgotten about it. But we're trying to keep things simple and we're trying to serve ourselves some really nice trade ideas rather than chasing our tail all the time as to what's happening in real time. So that's how homework can pay off with some different type of entries. Let me quickly share these, and then we're going to turn it over to Scott to talk about a really cool promo we got going. So created on the 26th. Here's everything that we created today. Let's share these 6 price alerts, copy all, and I'm going to go ahead and drop those into the chat window as such. So for those of you who want to take those price alerts and use those, that cloud link is available to you now. That's what we got for you today. Keep an eye on that Yelp if it does trigger. Trade of the week, still could be active, could be a good one. Anything you want to add, Andy, before I bring Scott in?
No, I totally agree with when you get in a market like this, guys, the exercise he's going through, it's very prudent to take your time and look for entries like this because breakouts aren't. I've seen several charts, like the couple he showed you there. Sprint's a good example. We were thinking about that, one time for the trade of the week, and I think we both agreed, breakouts aren't working. And I've seen a lot of them that are not. So yeah, look for entries where the people's pain is your gain, and they're coughing up shares, and you're there to take them. And they're very good risk reward, opportunities.
Which, in the same vein, can happen a lot when I get what I'm looking for on my washout bounces. Those a lot of times can be great ones, but I went through all these guys. I did not see one good washout bounce that made sense to me. But when I'm looking at washout bounces, trust me, I'm zooming out and I'm looking left and I'm seeing where the bottom of those wicks wound up trading to. So there's a bit of overlap there, but we'll save that for another day because there really was not anything worth sharing, in my opinion, on the washout bounce today. All right, Scott, play us out. Here's our slide. Let them know how they can save some money.
Yeah, thanks. You had a lot of good feedback in the room. I think a lot of people will be watching this over again to catch all the details. So I want to thank everyone for attending, and those of you that participated in last week's open house, thank you very much too. There's a code that we're giving out through Halloween called Haunted House. You see it on your screen, it's all caps. Go ahead and use that and save a big 20% off your first month or year of premium, or 15 off your first month or year of standard. So you can also look at your handouts panel in your GoToWebinar interface, click on plus and to expand it, click on the link, and you can get this slide and also the next one. So with premium, you not only have all the great stuff that Standard Trade Ideas comes with, which includes all of your real-time data, your exchange fees, the full hour of one-on-one training that Steve talked about earlier, the charting, you can go to the live chat in the trading room. It also includes, the premium includes the AI, Holly, unlimited backtesting with our backtesting module, the odds maker, the shareable price alerts, and more stuff like red bar, green ignore windows, all those kind of things. That's where our technology is heading. So this code, you want to use it before Halloween ends. And again, 20% off your first month or year of premium. So this is a great opportunity to pick up a year if you're either on in one of the standard plans, or if you're on the monthly premium, just go ahead and use that to upgrade. It saves you a bunch. Thanks everyone for attending. This will be up later tonight or tomorrow as a recording, and we'll go ahead and email everyone a notification with where to find it. Follow Steve on Twitter. He's Today Trader, Dan Merkin's Trade Ideas 1. If you put us into your Facebook and like us, Trade Ideas Pro on Facebook, you will see some unique things we post there occasionally. Might as well have us in your feed so you can also share us with your friends. Any questions, email info@trade-ideas.com. That's the best place to send technical questions. Steve's easy to get. He's Steve at, and Andy is Andy at. Real easy to find us. During regular business hours on the West Coast, if you have a billing question or a subscription question, you can call the 619 number. Any trading questions or how to use the software, though, info@ is the best place to send those, because that gets routed through our help software to the appropriate team member to answer your question. So thanks everyone again for attending. The recording will be up later on. Thanks Steve, thanks Andy. Oh, and there's a trading studio with Andy tomorrow. So when you get the email invitation for that tonight or tomorrow morning, go ahead and sign up for that, and you can watch that presentation tomorrow afternoon. Andy's going to have some good stuff for you, and as always, we'll record it and make the recording available too. All right, thanks Andy, thanks Steve.
Great. Good night. See ya.
Thanks guys. Thanks everybody.
Yep.